Here's a brief update on what's been moving the markets over the past couple of days since I recorded my last video, and we'll start with inflation. The Fed's go-to inflation gauge, the core personal consumption expenditure, the PCE, held steady at 2.9% year over year in August. That's in line with expectations, but still above the Fed's 2% target rate. Translation, inflation is cooling, but not quite where the policymakers want it to be. But don't forget, the Bureau of Labor and Statistics, the BLS, still hasn't fixed its flawed models and methodologies, not in regards to jobs, not in regards to housing component of inflation, not in regards to other line items that are incorrectly reflected in their measurements and calculation. We'll see how this all plays out in the end. On the job front, initial jobless claims dropped to 218,000, marking the second straight weekly decline after hitting a 4-year high. That's encouraging, but continued claims hover around 1.9 million now for 18 weeks, and that's not changing, suggesting it's taking longer for folks to land new jobs. The labor market is softening and the Fed is watching closely. Why does this matter? Because the Fed is balancing two key mandates: price stability and employment. When they adjusted the interest rates on September 17th, they cut rates, citing a rising downside risk to employment. The next major data point is the September jobs report that is due on October 3rd, which will heavily influence their rate decision on October 29th. And a quick reminder again, when the Fed adjusts rates, they're adjusting the Fed funds rate, the short-term rate banks use to lend to each other. It does not directly influence mortgage rates, but it does influence them longer term alongside a broader slew of economic trends. On the housing side, existing home sales were nearly flat in August, but that number reflects closings, meaning buyers that signed their contracts in June and July before rates eased in August. Remember, for most loan officers, it does take 30 to 60 days to close on the loan. I usually do it faster, but still. In contrast, new home sales surged in August, capturing those lower rates, because this measure is based off of contracts signed, not waiting for the deal to close. Whether you're buying, refinancing, or just exploring your options, I'm here to help you navigate the landscape with clarity. Reach out anytime. Question and referrals are always welcome. Like, follow, and share for more content.